Good afternoon, everybody. Thank you very much for coming. I think it's fair to say that there may be a sort of a mixed bag of knowledge around Quixant in the room. So I'll give you a sort of hopefully a fairly brief elevator pitch, if I may. If anything's not clear in what I say, please do stop me at any point. I can elaborate a bit on it. And then we've obviously got some results in here for the first 6 months of trading for the year. So just to introduce who we are, so I'm Jon Jayal, I'm the Chief Executive for Quixant. To my right is Cresten, Preddy, who's the Finance Director.
Hi there. I should say outgoing Finance Director.
Outgoing Finance Director, but still very current as it stands.
Thank you.
And Guy van Zwanenburg, one of our non-exec directors as well, joined me. So Quixant is a company which was founded about 13 years ago. And we set out with a mission on day one to be a provider of computer-based gaming products for the casino and slot machine industry. And very importantly, our proposition was to blend not just computer hardware, but also computer software to make a credible outsourced option for manufacturers of casino machines that were previously doing this kind of technology themselves in-house. So really what we presented to the market was, for the first time, an off-the-shelf outsourced option for customers that were creating casino machines. And I say casino machines, actually, it applies to any kind of pay-for-play gaming machine. So it could be for pub machines in the UK, or for what are called AWP machines in other countries in Europe. But these manufacturers were faced with a challenge because the industry was moving away from a mechanical reel-based machine towards a video slot, which required computer technology. The problem with computer technology is that it has many characteristics which are well aligned towards what is required for a video slot machine, but also many characteristics which are poorly aligned. So in particular, it's a very fluid market, the PC industry, and slot machines have got a very strict regulatory regime which requires all of the parts on that product to be consistent from one machine to the next until you submit to the regulator otherwise. And this is all done for the point of view of maintaining payout ratios which are consistent with the regulatory requirements, and of course, in all governments' minds, the most important, which is tax reporting. So the PC industry, we tried to address with our platforms all of the deficiencies of the standard computer that you're buying off the shelf, but offer the benefits of the flexibility and the programmability of PC technology. The other thing is there are feature requirements which are needed to meet the regulatory regimes in which the machines are deployed. And again, standard computers don't have those feature requirements met either. So we try to do all of that, and in many cases where we've been innovative and where we've patented technology, it has been around the regulations in gaming. So just to give you an idea of where we sit in the food chain, so our customers are the manufacturers of slot machines. For them, the most important aspect to their business success is the game itself. So if you're a player playing a machine, the only thing you care about is the game. Everything else is a necessity to make the machine work, but it's not something that's going to make you attracted towards it. So those manufacturers of the machines were spending a lot of money doing what Quixant does ourselves in-house today. We give them a way of saving that money and buying something that's fit for purpose off the shelf. So the games that are on these machines are something which are different in every market, but when a customer has a hit game, they want to be able to launch it across as many markets as possible to try and get a return on that investment. So the other benefit that we provide is that we offer platforms at a range of price points, from a high level for a high-end VIP casino market to a lower level for a street machine in an AWP type market. So that variety of platform performance and price levels is very compelling, because it allows manufacturers to address both ends of the spectrum with a consistent set of software. So we made a good success of our gaming business in platforms, and we launched a new product line in 2015 for gaming monitors. And the gaming monitors business is a much more competitive industry. There's a lot more vendors already participating in it, and there's a lot less IP that we're able to put into those products. However, we built up very quickly a very robust monitor business as manufacturers principally came to us because they saw our reputation as being so strong in the gaming sector. And I think that's, you know, a very important part of our proposition, which is our focus on one market. One of the reasons why we've been successful is because we haven't tried to do too many things at the same time. We've just been very disciplined and understand at a great deal of depth all of the requirements in gaming. Then in 2015, we also undertook our first acquisition. So I think it's important to understand where we've come from and why we've ended up in gaming. So all of the founders of Quixant were employed at a company called Densitron Technologies, which you'll see that we went on to buy in 2015. And we saw that company as being a bedrock for many new businesses and small businesses which spun out of it. And they are a very, very broadly based industrial supplier of small screen display products. Really, they're just a distribution business. It's buy and sell. They'll find a supplier of the equipment in the Far East and they'll sell it to somebody in Japan or the West. And they made a good business doing that, but it's become increasingly competitive and they've not been able to grow. But what they have been able to do is identify interesting opportunities for more valuable products in lots of other industrial verticals. And one of those industrial verticals was gaming. But we felt that they never had that willingness to focus and invest heavily in one market. They wanted to try and be broad brush and do it in lots of markets, which is why we left Densitron and started Quixant. But what we can't argue with is the fact that they have been very successful in identifying opportunities. So we've built a lovely business in gaming, which is growing at, you know, a very strong rate today, and we saw this opportunity in Densitron. So our vision with Densitron is it's a business which currently generates profit. It doesn't grow materially every year, but it does generate good profits and it's stable. But what it gives us is a platform upon which to find other verticals outside of gaming to expand our enterprise. And it does so in a way where we're not taking hugely high risk strategy maneuvers into other verticals when we don't really know whether they're going to pay off. We can take very incremental investment steps and hopefully some of those will deliver some successful results in time. But I think this element of being vertically market focused is very important, and equally the element of having software as part of the proposition, not just being a box shifter, is equally a key part of it. Quixant's are a very global business as well. So already we have a global footprint. We have offices in all of the continents, including, very importantly, in the Far East. So we always knew that if we were going to be supplying electronic components, we needed a Far Eastern manufacturing cost base. And so from day one, we've had that established, and one of our founders heads our Far Eastern office in Taiwan up, and we have about 100 people there, so nearly half the company is based in Taiwan. So that's a bit about the company. Slide 3, I've got a bit about our investment case. So why are we different? So we are the only specialised outsourced provider of gaming platforms. So really, when we face competition, it's whether companies do it themselves in-house or they outsource it. There are many other manufacturers of industrial computer products. However, those are not fulfilling all the requirements of a gaming platform for this industry. And we have made very significant progress with the largest manufacturers in the industry. So the market, there's about 500,000 machines every year that are new or replaced, and that number stayed very stable year in, year out. And about half of that is represented by the largest manufacturers in the industry. We have business with all of those, but still a lot of opportunity to grow it. And then within the smaller tiers of customer, they've been much more receptive to this outsource model because they haven't had the same capability to develop their own solutions in-house. So many more of those are already outsourced to Quixant. The fact is, though, that we still only have around a 10% share of the annual replacement cycle. So last year we sold 52,000 units. And therefore we see a very good opportunity to expand our market share in time to come. The other sort of compelling part of our proposition is we have a very strong level of customer retention. So to date, we've never lost a customer from the gaming platforms business. And that's really driven by the fact that once we've got designed in with the customers and they've got their software entrenched within their game, it's very difficult for them to move away from working with Quixant because they can then redeploy their engineers that were previously working on the parts that we do, and they then don't have the capability to do it themselves in-house any longer. So we have a slow gestation period while they get designed in, but then it's a very, very difficult process to get undesigned from that customer. And so I talked about a flat market. That's how we view gaming. The gaming industry is in total, the 500,000 machine a year number. But actually there are some major new geographies opening up to gaming. So Japan is one of the most topical items at the moment. Japan has just passed a bill for 3 integrated casino resorts to be opened, and that's the first integrated casinos in Japan that have ever been allowed. And in a market where, for example, pachinko is a very, very popular game, there are 4 million pachinko machines in Japan, you get an impression for how big the appetite for gambling is in the domestic Japanese market. And that's something which really, we're not reliant on when we look at Quixant's growth. We're relying on the market share growth, but that would be, an opportunity for growth in the industry, which is quite unusual. And then, as I said, we've also got this opportunity to leverage our engineering capability into new vertical markets as well. So there's the gaming part, which is pretty exciting in its own right, but then there are other opportunities in other markets where we can really deploy this set of skills we've had in developing a bespoke platform for a very optimized requirement. Quixant's had double-digit growth year on year and is dividend paying. And we believe that there's still considerable growth upside on the business, and we also are cash generative as well, so we create quite a lot of cash every year.
In terms of your markets, are these licensed markets?
Correct. Only regulated markets, yeah. So really, there are many unregulated markets. So Brazil, for example, has been on the horizon for some time as a new market that could regulate gaming. However, our proposition, the value proposition, doesn't work in an unregulated market, because if there's no regulation, you can use any electronics you want in it. There's no payout ratio requirement, no tax reporting. You can use a Dell PC off the shelf, and there's no problem with doing that. In regulated markets, the problem with buying a Dell PC, at the very least, it will change in a week's time. You can't buy something consistently. But also that there's none of the features that you need to drive the machine for the regulatory regimes.
And just the size of this market, half a million is the size of replacements.
Yep.
You do 52,000.
Mm-hmm.
That implies the other 450,000 are insourced,
Correct.
or do you have other competitors?
Yeah, so the other 450,000 a year are almost entirely insourced. So there have been some Taiwanese companies which have tried to do some, develop some solutions which are similar to Quixant's, and when you look at it from a purely sort of data sheet hardware point of view, it is, and what you typically find is that the customers don't have any software with it. So the reason why we like software is because it takes us away from being a box shifter and being compared to a Taiwanese manufacturer, and there's just very little interest in them doing their own software in-house. It's just not part of the ethos, and I think the barrier to entry with that is that gaming is a relatively small niche industrial PC market. Compared to some of the huge markets out there in things like medical. So unless some of the Taiwanese manufacturers decide to completely flip their businesses into R&D into the gaming sector for them, it's very difficult for them to compete with us, which is why in all of the years we've been going, we've never seen any major competition. So the situation we face is we're supplying a customer is doing it themselves. We'll go into a tender exercise, and it's a question: do we outsource or don't we? And that's it. We don't see a whole list of 3 or 4 other competitors. So what have we done over the 6 months to period end? So the first thing is you'll see that if you look at the weighting in revenues in 2018, it was fairly unusual. So I'm on slide 4 now. So typically, Quixant's been a second half weighted business. Consistently, year in, year out, we've had about a 40-60 weighting in gaming and about a 50-50 weighting in Densitron. And last year, we saw a very, very unusual trading pattern. So we had a first half weighting, which was principally driven by overstocking from one of our biggest customers. So we guided at the time that there was going to be a lower second half in 2017. And that that was an anomaly that we saw, and what we're returning to in 2018 is exactly the typical trading patterns that we've seen in previous years. But what we have had in the period is a continued penetration to some of the largest gaming manufacturers globally. Some of the largest customers in the industry, they've got entirely insourced offerings still today. But they are using Quixant for some elements of their technology requirements, which they don't see as core. So it might be that they have some technology that they need to complement every machine that they put out. So it might be a sort of a systems product that goes alongside those machines. Or it might be that they are trying to attack a new market where their core offering that they offer from their in-house team doesn't meet the right price performance levels. So in the first half of this year, we announced that we'd continue to see significant growth from one of the major global gaming manufacturers' jackpot controller products. So again, just to explain, it's not something they have one of these in every machine, but these controller products link several machines to provide a community jackpot. And they saw, they've seen the benefits of working with Quixant, and then after winning the first project, we won a second project with them for their Australian jackpot controller. So we have been growing our book of business in these major manufacturers, and that's really the key driver behind our top line growth that you see coming through. The other thing is we buy all our own parts in Taiwan, and if you follow the dynamics of the electronic components market at the moment, you'll see that there's been a lot of challenges around that area where demand has outstripped supply. And you've seen that lead times have become extended, and also that pricing has been elevated. So we're very proud of entering the beginning of the year with a strong balance sheet position in stock. And the major reason we entered that position was because we wanted to make sure that the shortages in electronic components, A, didn't affect customers' deliveries, but also that we managed to maintain our margins and didn't get hit with higher increasing BOM costs. And it's very pleasing to see the proof in the pudding in the first half of the year, because we have been able to maintain our margins when many other industrial PC manufacturers have seen turbulent times and declining margins. Densitron, as a business, you can see it as a company of two halves. So we've undertaken significant progress in repositioning that business and developed several new products, but that's despite the fact that we've been maintaining a profitable core business in the more commoditized distribution business that they had prior to Quixant's acquisition of the company. So we've been keeping good profits coming through from them, but we've also delivered now some interesting new products. And that really is where we see the future growth coming through from. So we're being cautious about how soon that comes on stream, and we're certainly not relying on it, but it's something that we do believe is very achievable in the future to create higher value product with margin expansion and increasing top line as well. And finally, we've come from a very small private company. So Quixant was originally founded by 3 people, and we're now a company where we've got 205 people. We're in more countries, and we've got the city to look after as well. And indeed, we've got a much more complex organisation with more products in it. So it's right as well that we're continuing to enhance our organisational structure, and we put in place distinct divisions for gaming and Densitron, which means that at the parent company level we've also got a decent corporate governance overlay, and certain shared services like legal, HR and IT, which are clearly agnostic to individual divisions. So we continue to invest into the robust business that we need to have to run the scale of operation that we have today. Cresten, would you like to talk some finances?
I'd love to. Turning to slide 6, Quixant has had a really good first half. It's put us on track to achieve our year-end forecasts. As Jon was saying, our margins have been maintained. They've gone up a couple of notches from 34 to 36%. That's largely because of the decline in monitor business, which is at a lower margin. So the gaming board business margin is robust. Overall, it's in the low 40s for the 6 months. Gaming platforms, just seeing a sec actually on the following slide, they've actually performed really well. So we've got some increased business coming through, and they're comparable with last year. Given that last year was an unusually weighted year, that's a very good performance from our platform business. Densitron has come in very much as expected, in line with prior years. Our expenses have gone up. They were 11.7 million. And what we've done is we've increased our R&D spend. That's now 3.2 million, of which we've capitalised 1.3 million. So we've invested more in our engineers in Italy and Taiwan. And we've also invested in the Densitron engineers based in Slovenia, who are developing embedded board products for Densitron's markets. Adjusted PBT 7.1 million. I've exceptionalised a total of about £1 million of costs, being restructuring costs of £500,000, the amortisation of Densitron goodwill, it's about 0.4 million, and 0.1 being share-based payment charge. So the unadjusted PBT was 6.1 million. Cash, we always generate cash, I'm pleased to say. The cash generated in this 6 months was lower than I would have liked. It's because we've got some overdue debt at the end of June. That's all been collected in July and August. And there's something that we're very conscious of in taking measures to prevent as we approach our year end. So on slide 7, what I've done is I've split the halves in recent years, and you can see here that particularly in 15 and 16 our weighting was 40-60, and that's broadly the pattern that we think we'll end up with in 18. As John was saying, 2017 was a very unusual year, and we knew that at the time and reported so.
So I think our confidence in full year, it comes down to principally, 3 things. The first is we've got a record order book. The second is that we are returning to normality, as it were. And the third thing is that we've got 2 months under our belt in the second half, both of which have been very strong. So overall, that gives us a very good confidence that our forecasts for the full year are very achievable. There's an unusual effect that you see coming into year end, where you have your orders right out to the end of December, and usually come the first week in December you start to get some surprises drop in. And in previous years it's caught us by surprise, and we've not had stock to handle it, and then we learnt the lesson after that year to start building stock in significant volume for the month. But I think there is some element of casinos' buying cycles tend to be on an annual basis.
So, and what's your general visibility between getting an order and doing a sale? How long is that period?
So it's different for 2 types of customers. So we have some customers where we don't hold stock and they have to draw down on normal lead times, and that's usually 12 to 16 weeks. Then you also have the customers where we do hold stock, and some of those customers have what we call consignment stock, so they hold stock in a warehouse at their premises, and they can draw down on that, and that can be weekly drops. So the answer is, if somebody's going to order something from us for the year end which is not already in stock, then we would have got the order already. If it's an order for something which is in stock, usually the quickest it could be is a few days if they've got it on consignment stock. If they want to put it on a plane, it's usually a week, and if it's on a boat, then it's a month.
Is the implication of that most of the platforms are different for each manufacturer, each customer? No,
so it's a bit like it's build options. So they're the same standard product, but you can do slightly different build options. That's all the way to look at it. It's how they're configured. So there are different specs you can put into them. That's really what it is.
You said that the debt balance, I got the impression that is there an issue there in terms of time? Is it a delayed payment or not?
Well, the overdue debt, no, there's no issues.
It's received since, but it's just
received in July and August.
It's customers taking advantage of payment terms.
All customers will do that. Some customers do it more than others. Okay, so I've got the cash bridge here. I think the only unusual thing here is the increase in debtors, which I've already referred to. I think everything else is pretty well as expected. Interestingly, John mentioned the concentration in stock. Stock actually went down fractionally, so it's at December's level. We haven't increased it in the 6 months. And I suppose on a normal basis, it's about 5 million overstated. But on the other hand, it's a good use of our surplus cash, to be honest. And we're getting a better return in maintaining our margins than if we'd done anything else with it.
On slide 12, I've shown an illustration here of what we define as our gaming ecosystem. So what does that mean? Well, when you look at what Quixant offers in terms of a value proposition, It's not a box, it's not a mechanical design, it's not the fact that you can use third-party equipment easily with our hardware. It's not the fact that you can move games between different markets or we meet the regulatory requirements. It's all of those things. So what we try and encapsulate in this is what the essence of the value in choosing from Quixant would be. And some of that's down to the software that we provide, some of it's down to hardware, some of it's down to the way we support customers, our business model. All of those things are the value drivers behind using us as a supplier. So if you take the electronic component shortages, for example, we solve that problem for customers. So that's something that they would be facing in their supply chain teams. If we didn't do it, we buffer them from it. We handle that challenge. And they simply get a product off the shelf which meets their requirements. Similarly, in other areas, we've started to develop software tools now, which in their own right are pretty compelling as standalone items. And so those are things which we can use as a great deal of leverage with our customers to entice them to using us if they're currently not already doing so. So those software tools are very, very powerful as hooks into Quixant and a good justification for why the product is differentiated against their in-house offerings. Where we've come from with monitors, as I said, was as a Me Too product, and we've now started to use our ethos of value creation, of innovation, to focus more on interesting areas of the market. And one of the particular areas of interest is in the button deck space. So to explain what that is, the slot machines used to have main screens that were computer-based, and then they had a physical button deck that you hit to control a game. So on a fruit machine, it would be the nudge buttons or the spin button. On a slot machine, it would be the number of lines you bet or the size of the bet that you place. But manufacturers have been making a move towards more animated electronic button decks, which are more like an iPad. And the reason they were doing that is because they saw an opportunity to, again, create more differentiation in their game. At different phases in the game, you've got different buttons to press. And because it was reprogrammable, you could have anything on the screen you wanted. So, that on one hand, that's great, but on the other side of it, it provides a lack of tactility. So players wanted to have a physical button that you press to spin the reels. And so what we started to do is blend physical buttons to spin with other buttons for bets and the number of lines. And that was, that's been a very interesting area of growth for us, and also an area where we've been differentiated against some of the competitors that are in the typical main screen market. And that sort of led on to the Densitron value opportunity that we see. So the broadcast industry is where we've started as a first vertical to sort of try and leverage our engineering capabilities to create a bespoke product. What we see as an opportunity is to, first of all, address this lack of tactility that touchscreens offer. So there's a number of different ways we can do it. One is haptics, so you get feedback when you press the touchscreen. The other is putting elements on the front of the touchscreen itself so that you can physically press it. And the second thing is that to drive that touchscreen and that display, you need to have computer electronics. And the computer electronics, guess what? They need software as well. So what we see as an opportunity is to create control devices which are touchscreen based with some element of tactility to them for a wide range of other industrial verticals. The first one where we're focused on is broadcast, but I think what we develop for that broadcast market will have widespread appeal into other verticals outside of that market. But the first thing is again, learning lessons from the past. We don't want to do too many markets too soon. So once we've cracked broadcast, we then will look at what we do next after that. And so, again, our marketing approach is that we are targeting marketing at very specific verticals, and therefore we're going to broadcast exhibitions to market the products. And the beauty with that is that you're not going to a general bulge bracket electronics trade show. All of the people around the hall are all your customers. They're the exhibitors. And you don't have any competition in the room either. So you have sort of, you have carte blanche to go and sell to all of your customers without anybody else trying to counter that sell. I think if we can get these HMI solutions fully engineered, productized and ready for mass production, I think we have a very good opportunity in broadcast and in other vertical markets outside of it. And that's meanwhile following a fairly low risk investment approach where we don't take too much too soon. We take a stepwise approach, put a product in front of a customer, get some feedback and go and continue to evolve it.
So HMI?
Sorry, human machine interface. It's a control device. And I mentioned on slide 14 that we've continued to strengthen our management team. the challenge with a fast-growing business and a very international business is making sure that it keeps up. The opportunity we've focused on has been, has been very successful, but on the flip side of that, we've had to keep the business going to be able to deliver that success. So we've made a couple of key hires over the last 6 months, and what this gives us is a good platform to effectively manage a bigger organisation. And linked to that is what we've been doing around SAP. So we've spent now a couple of years, this will be the second year and we'll conclude it at the end of the year, implementation of a new SAP system throughout the organisation. So we've had pockets of SAP support throughout the company, but we've started with a clean sheet to build a full SAP system for the whole company. And that's something which will allow us to more effectively manage a bigger organisation going forward for the next 5 to 10 years. And finally, again, we feel that having robust corporate governance standards is good, so we've adopted the QCA Corporate Governance Code as well as part of our commitment to making sure that Quixant's a well, transparently managed company. So just in the outlook, we've had a very robust 6 months of trading performance, and all of the factors that we've talked about give us great confidence in achieving full-year numbers for both revenue and profit. And that's underpinned by a solid revenue growth from some of the major manufacturers, and revenue growth in the smaller tiers of customer as well. So it's quite broad-based. Gaming monitors, we think we're going to end up with a full year at a good position, below previous years, but still considerably higher than where we are today. And we've got a more rebalanced and refocused portfolio of products and customers within that. And Densitron continues to trade profitably. We paid about £7 million for it in 2015, and it's been generating about $2 million worth of PBT a year. So it was a great investment to make. So the profit levels are good, but we still have some significant opportunities for margin expansion and top line growth as well in the long term. And obviously making sure we have a good management team is very important to be able to deliver that, and hence we've made the investments we have and reshaping we have to the management structure over the year. And I think we've got a very good opportunity for long-term gaming growth opportunities, but indeed also growth opportunities from other markets in the medium term. So that was the formal presentation, but please do ask any questions that you might have.
Are most of your revenue in dollars?
Yes. And/or purchases are in dollars as well.
And the purchases are in dollars.
So we try and almost everything is dollar based. So we try and the only thing that's not is some local overheads, and we have also our dividend, which is paid in sterling, but we hedge. Are you worried about any adverse taxation impacting you, that one-off? The Brexit, you're thinking about it. So no, and the main reason I say that is because we're so international already. So the fact is, for the gaming industry, the UK market is less than 5% of the business. Almost all of our imports into Europe come directly from Taiwan anyway, and they go directly to the customers in Germany, Austria, wherever it might be. The Densitron business again is all supplied out of the Far East directly to the customers. So actually we have a fairly small sort of impact from that. The other thing is because we have so many other sales offices in other countries, in France, Germany, Italy, we've got the scope, if we needed to use one of those subsidiaries as an alternative route into Europe. I mean, one of the things we are looking at is the impact of the US trade tariffs. That's something which we are looking at closely. At the moment, we're not affected, but it's clearly something that we will be tracking very closely. So we have Deloitte as our tax advisors that are very much working hard with Cresten on making sure that we don't have any nasty surprises there. So I think we've got a fairly sort of, we're quite cautious about being too aggressive on taxation. It's clearly a very sort of topical corporate issue at the moment. There's some companies that are paying very, very low tax rates, and I think we optimise but don't do anything too aggressive. So I think that's a much more comfortable position to be in.
I was going to say we earn most of our profits and pay most of our tax in this country, which I think is probably right. It's where the IP is based, where the central management is based.
And we get patent box relief here as well.
Yep.
What is the profile for capitalisation of intangibles, presumably development spend? What sort of products does that relate to? And was the 1.7 million capitalised in this half year, is that sort of fairly typical? And how does it all compare to amortisation?
Okay, so we capitalised two main aspects. There's R&D, which is about 1.3 million. The 0.4 million is the capitalisation of our software, so our SAP development project. Obviously, that will begin to be amortised from next January when we start using it. In terms of development products, there are two types. There's the embedded costs, which are incurred with the Densitron embedded team in Slovenia. That's about 0.4 million this year. That very much developing future products for Densitron. That won't be amortised until they start being sold. So next year at the very earliest, but quite probably actually the year after. And the expenditure on that will, I think, continue until then. In terms of gaming R&D, what we capitalise is actually equal to the amortisation, because obviously previous products are now being sold. And the goods, the costs we've been capitalising. This is QMax 2, which I guess accounts for quite a substantial part of the development costs, and that is going into mass production shortly.
Yeah, October.
Yeah.
And you depreciate the capitalised
We depreciate
products over what sort of period?
5 years from when they go into mass production.
Could you talk through the share register and what the internal holders, the founders are, and their ambitions, and who have come in as the outside shareholders?
Sure, yeah. So the founders and their sort of families, relatives, close friends of the company are still, the biggest holders in the business. I think it's about 35% now, something like that, of the company. There still remains a significant holding with directors' stock and immediate sort of founder stock. We've also, when we came to market, we raised a small amount of capital, but it wasn't a significant amount. It was about £4 million we raised. But I think, important to understand why we came to market. It wasn't for the cash. We've always generated the cash we needed. It was more for the profile of being a public company and attacking multi-billion-dollar customers when you were private was always quite difficult. So the profile of being a public company certainly helped. Since then, there's been a couple of sell downs by founders, entirely driven actually when there's been market demand. So we did an earnings upgrade in 2016. That was one of the sell downs because there was no share supply, and there were several significant institutions we wanted to bring on board. On that subject, though, institutional-wise, our biggest shareholder is Hargreave Hale, which is now Canaccord Wealth. We've got several other disclosed holders, people like Octopus, Schroders, Tellworth, Lion Trust, and Amati. So we've got a pretty broad shareholder base. I think the biggest of those is about 10%. Hargreave Hale are about 10%.
And the other question is, you're located near Cambridge. Is that a difficult area to recruit the kind of skills that you're...
If we were trying to hire engineers, I'd agree with you, absolutely, yeah. I mean, Cambridge is a real, it's a very hot job market there. I see salaries and talent being equivalent to London, really. And so, yeah, if we were trying to find engineers, we'd be up against competition from ARM, and ARM's only up the road from the office. To be honest, one of the reasons why we're in Italy is because we found engineering talent there, and it's almost limitless. So we have the unusual fortune in Italy that we hired people from an Ericsson facility that was closing down, which was full of embedded software engineers. And we never struggled to hire talent in Italy, and the amazing thing is not only do we hire good engineers, but they can also see customers, and you're quite confident with their ability to hold their own in front of customers. So they're very, very sort of, they're very commercial as engineers go. So what we really have in the UK is we've got the company's management, we've got finance, sales and marketing, and product innovation, I guess, is led from the UK, but a lot of the idea generation, a lot of the implementation gets done in other countries. So, you know, the sales team, and I look at it like we're a sales-led development company, so we don't develop anything which is totally blue sky. It's always got some consumer or some customer angle to it. But the way I look at it is if a customer asks us for a feature or they say we've got a problem, we should deliver something that's at least 30% more than they've asked for, because otherwise we're not innovating. So it would never be that we come up with that first 70% ourselves, because otherwise we're taking a risk that what we develop's not got a commercial value. But it's the magic is in that last 30% where we not only solve their problem but give them something in addition to it.
What's in Slovenia?
So that's where we develop the ARM boards, the embedded boards for Densitron. So the core of Quixant's gaming business uses higher performance, high graphics products, which are they're more similar to the types of electronics you'd find in a games console. For driving these sort of control devices for industrial applications, you need a much lower cost and much lower power board. And the stuff that we do in the core gaming business isn't particularly well suited for that. So we've developed ARM boards, which are very low power and low cost, purely for that sort of control device requirement. So we've got, you know, we've got 6 engineers in Slovenia that do that. But again, they work quite closely with the Taiwanese team. So in the same way as Italy worked closely with the Taiwanese team for gaming, the Slovenian team are doing a lot of the innovation, and then they're using the Taiwanese team for the implementation.
How well positioned are you to capitalise on the Japanese opportunity?
Really well. So if you'd asked me that question before we bought Densitron, I'd have said we're going to struggle. But when we acquired Densitron, we acquired an office in Tokyo, and the managing director of Densitron Tokyo was previously in the company when we used to work there. And not only that, but he was the one that first came across a gaming customer and was selling to them when Densitron had a business in that area. So it's not only that we have somebody that speaks Japanese and understands the local market, but he also has some experience in gaming. So I can't honestly say that we knew that Japan was going to open when we bought Densitron, but it's certainly a very nice coincidence that it's falling into place that way.
And will you have a sales team there, or will you?
We already have through him, yeah. So we may hire additional resource, but at the moment he's more than capable of doing that. We've effectively seconded him into the gaming business.
And with your stock levels, are they likely to be the same this time next year?
They're likely to be the same at the end of this year. I couldn't tell you into next year what we're going to do. So in certain elements of our supply chain, the stock problems eased a bit and prices have come off a bit. So in those areas we'll be reducing stock, but then there's other areas where it's as tight as it ever has been. So I would imagine by the end of this year we'll end up at a very similar stock level. We're certainly controlling it going up too much further, but I wouldn't envisage us reducing it significantly until we start to see an easing in some of the component shortages that we've had. So it may be the case if we start to see a bit more capacity come in or a bit of demand decline in 2019 that we would reduce the stock level, but at this point in time I can't commit to that.
And do you think there'll be any write-offs because of stock levels?
No.
You talked about 3 sort of growth drivers: Japan, the broadcasting opportunity, and just gaining more market share.
Yeah.
How would you sort of weight those as in your mind as opportunities, and then also just in terms of timing to come in? I was struggling to understand how imminent the broadcasting in particular was.
Yeah, so the first one of those, the safe bet, is the core gaming market share growth. That's where we've had our bread and butter so far. So the fact that we can do that and we're still only at 10% is sort of the testament to the fact that that's very, very achievable to grow materially from where it is today. The Japanese one, I think there is opportunities for growth with Japanese customers, and that's different to the growth that comes through from the Japanese domestic market when new casinos open. So the Japanese customers are selling to lots of other markets as well. So winning business with one of them, even if Japan had never happened, would have been worth doing because they're selling 10 to 20,000 pieces a year to other markets.
Lovely. Thank you very much indeed.
Thank you very much indeed.
Thank you.
Thank you.